All right, welcome back. Episode 97. I get to officially lead a Pickers Market episode again, so I'm feeling pretty good.
I think you almost forgot how to do notes, I think.
Thank you for that note.
No.
Yeah, Keith.
Yeah, my notes.
You needed a little extra.
See, okay, but here's the thing.
Oh, boy.
I did the notes. She didn't even read them.
I did read them.
She did.
I did.
Until this morning, so I might as well send them out at 9 o'clock last night.
No. That's
Cats and dogs living together.
Good Lord. Okay.
This lack of preparation is killing me.
Keep you on your toes in your fancy new shoes.
And my fancy new shoes, exactly.
All right, we'll get right into it. 2 truths and a lie. So we took a break the last couple of weeks talking about AI. So I wanted to do a AI focused ish episode. So our 2 truths and a lie is Chat GPT or GPT-4, which is ChatGPT. It's one of their newer models. Was trained on roughly 1 trillion tokens of text data.
Oh boy, this is gonna be a tough one. I can see this already.
AI models like ChatGPT or Claude, for that matter, or Gemini, or whichever one you want to choose, can learn new facts permanently just by being told them in a conversation. Some AI language models have been trained on text scraped from Reddit. Lisa.
It's always
Start
me.
Lisa with the new shoes. Let's go.
It's always me. Let's start with C. Some AI language models have been trained on Reddit. That's true, because that was a huge controversy.
That's confident.
So that's true. There's also no weird numbers in there that you could have tampered with. So I give that a true. A was trained on roughly 1 trillion tokens of text data. I have no idea. It sounds reasonable. Could be. What kind of stood out to me with B, gives me a little itch there, is AI models can learn new facts permanently just by being told them in a chat bot. I think they learn about yourself, about you, about your style, about who you are, and can, incorporate that in future kind of chats. But I think they're not training. They're trained before. And then it's just,
Train, it says learn.
Yeah, right. Putting that to, I don't know, B is wrong. The permanently learning, I think it's just what they train before they are actually let out in the wild. And then they just, do their AI stuff. do their AI stuff and learn about you as a person, but not new facts. Yeah, no, B is wrong.
B is wrong. Okay.
That's a long answer.
I'm gonna keep it a little tighter than that, but C, I believe, is true. A trillion, that's a big number, but it could be bigger. So maybe it's 2, but I'm going with A is true, and I'm gonna say the reason I think B is false is permanently. So I think that's might be the trick word in there. So that's what I'm saying.
Good
false.
job.
You
guys are both
yes.
What? Yeah, nice.
All right. Okay. I didn't know if the trillion would throw you off, just because that's a big number.
At some point it's just numbers. It's like, okay, it sounds good.
Because to Lisa's point, like your account is tied to ChatGPT or Claude, and it learns about you, but it's not permanently put into the model. So like if you put something in and then I go the next day and ask it about you, it's not going to spit out like all the stuff.
Keith likes new shoes.
Yeah, like it's not going to say that kind of stuff. So
I got you.
Good job.
Nice job, Lisa.
All right. So today is Fed rate decision day.
Woohoo.
Yay. But the market's not really expecting anything. And it's been an interesting change even since like the start of 2026, the expectations for interest rate cuts have dramatically changed. So at the beginning of this year alone, we were expecting about 3 rate cuts. And now we're barely expecting 1 cut. So one thing that I want to ask you guys, and I want to tie this back to the last couple of weeks of episodes. I know we're going to talk AI here in a second, but the Federal Reserve likes to look at core PCE, which is a little bit different than CPI, generally the same thing, but they look at core specifically because it takes out a lot of the energy prices and food prices because they claim that they don't have a lot of control over it. So do you guys think that as the Federal Reserve is looking at, do we do a rate cut, rate hike? Do you think even though they look at core PCE or core CPI, do they take into consideration the energy prices when they're making their decision on interest rate cuts or interest rate hikes? Keith?
Yeah, that's a good question. First, before we get to that, I'm going to back up. You in our debate from last year, how many rate cuts, you technically landed on the right one. But if you look out, I was looking a little longer, Tyler, and now the market's
okay. He's looking out longer.
The market's firmly falling on where I was of not being so aggressive and cutting.
But wasn't Tyler expecting 3 rate cuts for this year?
He was.
You were. Yeah. Anyways, but you locked in 3.
You know what? I'll stick to my 3.
Oh,
you
wow.
stick to your 3?
I'll stick to my 3.
Oh, look at that.
Yeah.
I'll make a bold call.
Well, I'll go on the other end. I'll go 0 then. So just so but anyway, all right. So
okay. So you're gonna bring this up. So what were you at last year?
I think I was only off by 1 cut, 25 basis points. So, and whereas you were kind of hedging yourself all year as it went along. So
no, I firmly said 3 to 4 all year long.
Mm-hmm. So anyway, we have a little running debate here.
Sure
so
we should let AI kind of scrap all your past episodes and let's come up with a summary of who said what at what point in time.
Wow, that's a good idea.
Well, I think we did it in the first episode of the year.
All right,
so I'll go back. I'll go back and watch that episode.
Yeah, we will consult Cloud for that.
Yeah, we may have some AI, some input here. So, but anyway, back to your core PC. Should they consider energy? Yes, I think they should. It's kind of funny because it's what impacts people, generally speaking, are the things on a day-to-day basis that they take out, which is food and energy, which is a little bit comical. And I kind of get why they do because they have less control over it, like you said. But that doesn't. If you have elevated energy prices for a sustained period, you certainly should consider that. I do think that is, even though they say they don't, I think they, in the back of their mind, they kind of do. And that's kind of why I think you've seen this number on this chart. If we had it above of expectations were for 4.43, now we're down to 3.05, so basically no cut. That's a 50 basis point swing in expectation. That's a lot in just a couple months. And I think it's firmly on the fact that oil prices have been more volatile, they're increasing, which is putting upward pressure on inflation. So I think you certainly have to consider it. So that's why they also look at stuff like PCE and PPI, and then we had a PPI this morning. It was a little bit hotter than expected. So again, if you think oil is going to stay at a higher level for longer, then I do think the Fed needs to be on the sideline. I don't think they need to be raising, which now you're starting to hear.
You mean they need to be off the sideline?
Yes.
Yeah.
So, but you don't. I'm certainly not falling into the camp where we need to start raising rates either. So, but the 10 years kind of. You can talk about the fixed income side of things or the rates, but I do think, long-winded answer, that the Fed should be considering food and energy, just because certainly people don't exclude it when they're daily bills, right? Like, and what do you hear? And mostly it's like, oh my goodness, I go to the gas. That's the one thing people feel right away.
Well, I remember back in 2022.
Yeah,
we put together the core CPI, right? Or like, what did we call it? I forget what I called it. Anyways, it was a basket of like necessities that people have within the CPI numbers. So it was like oil, natural gas, utilities, and food, right? Like those are all things that
you have to have.
Are somewhat non-discretionary. And like the CPI number print would have been like 21, 22%, somewhere around there, versus the 9% that we saw in the
headline CPI number.
Yeah. So, or the core at like 8%, right? So it's like, I feel like at some point they have to consider it. But Lisa, would you agree with Keith that they should at some point consider it? Do they not consider it? Does it affect their decision making on what type of rate cuts or rate hikes, depending on the direction that they should be making? Like, just overall thoughts.
I think I'm on it with Keith. They should consider it. I mean, again, it's not only oil and rising energy prices that is scrapped out from core, yes, but it's also flowing into a lot of other products as input costs, as transportation costs. So it will also affect core inflation down the road. And just a couple of stats that I saw, which I found interesting, like data going back to the 80s, found that a 10% year-over-year increase in oil prices, and we are far above that already. When we look at year-to-date, what energy prices are doing, can lead to an inflation boost by 2.7%. Given the weight within the basket, about 6%, that's 17 basis points to headline inflation for the next report right there and then. And then you add, okay, it flows into other products, into food, into transportation costs, and all of that. Then it's about a 25 basis points increase, which is a lot just because of one part changing. And also, I mean, when we look at inflation data that we have so far, we do not really see that yet because since the conflict really broke out, we haven't had a new inflation report that takes that into account. So we will get that over the next weeks. But even before that, when we look at inflation, it was an upward pressure again, right? It's coming overall in the right direction, but it was not an easy way. We kind of had some negative surprises when it comes to inflation, PC, and CPI over the last weeks for January and February. So there was already upward pressure, and that is even before these oil spikes are feeding in.
So should the Fed be cutting
when
you have like oil price spikes?
No. I mean, today, from an interest rate decision, I think it's clear that this is a non-event today. They will not be cutting. But I think what will be interesting, what investors should and will really focus on, are the remarks of Powell at the press conference. And he will get a lot of question, and for sure will focus a lot on, okay, how is that pressuring inflation? How are they looking at it? Maybe how are they taking into account, even though they are more likely or more, said to look at core rather than headline inflation. And it's interesting how they think it could, change their economic outlook for the Fed, depending on how long it takes. I mean, that's the big question, like how long does it take, right? The conflict itself. But even if it's resolved today, it's said that it takes weeks, if not months, until we are back to normal. So we cannot expect a easing too soon about that. So they have to take that into account, I think, and have to talk about it. So I think the remarks are more important. And overall, I think it pushes just back their interest rates overall, projections further back to the year.
Well, I'm glad you brought up some of those points, because what I was thinking about last night as I was putting these points together is, because both of you are in the camp that, like, if oil prices rise, it stretches the consumer, theoretically, the Fed should cut. But you brought up the point that oil prices oil goes into a lot of different things, which the more elevated it is for the longer period of time, it leads to higher prices. And one of the Fed's mandates is to control prices. So what I was thinking about in my head is it's this like conundrum that the Fed probably runs into, which is probably why they try not to think about oil prices, because theoretically, under normal circumstances, if you start to see prices rise, the Fed's going to hike rates. But everybody thinks that the Fed should be cutting rates when oil is high because the consumers are feeling it in their wallets, right, to try and spur growth and spur spending. So which outweighs which? If you start to see elevated 25 basis points and you start to see that month over month, does that mean the Fed should be cutting or actually hiking interest rates because you're starting to see companies pass through prices that the Fed doesn't necessarily want to see? So it's like this. Yeah. So I'm just curious your guys' thoughts on that, because I was thinking about that last night as I was putting this together, is like, which outweighs which? I
think it's a teeter-totter, and it's kind of like, you get the Fed's got the dual mandate. So it's the stable pricing, and then you cut rates to spur the economy, which then your pricing goes, all right. They're never hardly ever on the same
Yeah.
side, right? You're always trying to do the balancing act. So what I think right now is, I would say 6 months ago, inflation was kind of very stable, that kind of low 2s to 2.5. I think it was going to stay below 3. So I think the focus was on potentially a softening job market.
Mm-hmm.
And now I think that, if I had to guess one, I think that's why I'm saying no cuts. I think you're tilted towards higher inflation because of price of oil, and the Fed's definitely afraid of high inflation. Like, that's the situation we have with that 9% in 2022. Markets are terrible. The whole thing's terrible. But then again, as if people aren't working, you'd rather have high inflation. So it definitely, there's no easy answer there, right? But I think if I had to be inside the Fed, I think their mindset just recently switched from worrying about jobs to, we need to worry a little bit more about inflation.
I just found it interesting because, like, everybody, to Lisa's point, like, everybody, the general understanding is that higher oil prices with stretched consumers should lead the Fed to lower interest rates to try and spur that growth and spur the spending. But then to your point, it leads to higher prices, and that's the Fed's mandate, is to control that. So just that.
Where do you fall, Lisa? What do you think the Fed's got one way or the other?
So I think that, to your point, and you described that that well. Like, I think that last year the focus shifted from inflation worries more to the job markets. As the job market weakened, we had less job growth, we had huge revisions, we had the unemployment
jolts coming down, right?
Yeah, right. And the overall unemployment rate is not, completely blowing out or anything, but under the hood there's a lot going on, and which industries are adding jobs, and that is a discussion in itself with healthcare and how healthy that is, that just basically one or two sectors are driving the job growth. So that switched to the labor market, and was basically, okay, we probably need to cut rates to spur the labor market here. Now I think that shifted back, sort of to Keith's point. I think the worry is now back to inflation. And I think overall the consensus was, okay, cutting, just about when are we cutting? And now it's like, okay, we probably hold on for a little while and see how this plays out. And if it really gets bad, then there's more talks about, the Fed actually needs to raise again. And I read and heard already some discussions about that. There's whispers out there that from just cutting and rate hikes nowhere to be seen, that we're slowly hearing whispers, maybe we see a raise this year instead of a cut because of that. Mm-hmm. And it all kind of depends on how this is all playing out, how long it takes after resolvement to go back to normal, which also will take a couple of weeks or months. And what prices are doing then. But I think there's more talks about a raise rather than just cutting again.
Where do you fall down?
I don't think the Fed's going to raise. I don't
either.
Especially based on who I know the
new Fed chair
coming in.
That's another uncertainty that adds to that.
He generally disagrees with Trump. Right? Trump is.
Mm-hmm.
We won't get into that, but. I would say the FOMC in general is more towards the dovish camp than they are the hawkish camp. So I would assume that even if my 3 rate cuts don't happen, if they do anything, I would lean more towards a cut than an actual raise.
Mm-hmm.
Oh yeah, I mean
definitely.
Yeah,
I think for a raise, it there's a lot to be. That
there
needs
there
to
has
happen.
to be a lot be going on, and
Yeah.
I think it would also. I think it would damage the consumer more than what oil prices are doing.
I think the one not surprise is maybe this war conflict in Iran all of a sudden ends quicker.
Mm-hmm.
I think there's a little bit of starting to see different things of just the language that maybe we don't resolve what exactly is going on. They've destroyed enough of their capacity on the nuclear side and all the missiles, and oh, by the way, the Straits of Hormuz is no longer our problem, somebody else's problem. So by we, I mean the U.S. So then if that's the case, then maybe the straits get open, the oil starts flowing, and then that's the inflation argument kind of peters out, and then back to the focus on jobs.
Yeah, I would agree.
So
going back to the Fed, one last question. I'll use this to quickly segue into the next segment. But as the Fed releases their updated press release and then the press conference to follow, do we hear anything about AI? You mentioned the dual mandate of the Fed and unemployment or full employment being one of the mandates. We've heard a lot in the markets about AI and displacement of, specifically white collar jobs, but does Powell even discuss AI and the impact that it's going to have?
I would, if it was black or white, yes or no, I'm saying no, but he may get into a little gray area and just kind of just say, AI, but I don't think he'll certainly say it's disruptive yet.
You don't think he will? He won't. Do you think if a question is asked about white collar jobs or just jobs in general with the impact of AI, do you think he just kind of slides it and pivots it to, well, our mandate is full employment and yada yada? And
I mean, it's too early to tell because there's been some job destruction that we'll probably get to here shortly, but there's certainly been other efficiencies. So that's why I don't think he's gonna be making any big statements on AI.
Lisa?
I think for now, and when we think about today, I think their worries are otherwise. And also I think the journalists' focus is otherwise on oil and inflation rather than AI and the labor market.
Which is interesting because if this would have taken place 2 weeks ago-ish, their focus probably would have been on AI versus oil.
Yeah, probably. Yeah, for sure. So that kind of threw a wrench in and kind of diverted a little bit where people are looking at and a little bit the focus. But I think for today, it will be not really a huge thing. I think down the road, it will pick up once that is resolved. Okay, how much displacement can we expect? And I mean, the Fed doesn't know either, right? I mean, nobody knows yet, but for sure they have to take it into account at some point. But I think the problems that we have right now, or the focus where it is right now, is probably not on AI. And I don't think he probably will not get a whole lot of questions today about it. And if he would get a lot of questions, I don't think there would be a clear answer to that.
That's fair. So the reason I wanted to ask that is because I want to segue into the next segment. And I know you guys had chatted a little bit about the Citrini Research report that came out, what was it, like a month ago now? A month and a half-ish? But it was essentially like just a 2028 scenario of like world of AI and the impacts it's going to have on the different industries. And one of the things that stood out to me was like 10% unemployment. And so it was kind of a good comparison to with the Fed meeting today with their mandate of full employment, and unemployment being at 10% is in the current environment, it's a pretty big disaster.
Yeah, that's even when we had the spikes of when the economy shut down, we were talking mid-teens.
Yeah,
so 10% without
without a shock,
without the world shutting down.
2020 unemployment was what, No,
the COVID. It's 14, 15.
Yeah,
no, it's almost a little above 15.
Because then 2008 was just under 10.
9, 8 or something,
like
but
that.
So those are
like
disaster. So if you're getting 10%, that's why I think those headline numbers are a little aggressive.
But what's interesting though is like we continue to dive into the AI, not only just like research on like what it can do, but also how we're utilizing it in our business. And so one of the things I did last night for this topic specifically was I asked Claude AI what questions should I ask about AI on our podcast, right? So like using AI to talk about AI on the things that I'm doing, but it
next week we have an extra seat for Claude here.
Yeah, seriously.
Answer questions.
We'll rotate between that and ChatGPT.
But one of the questions that I came up with, and the reason I thought it was, it's a fair question to ask, but AI agents and autonomy. So there's been a big shift, obviously, in what we're doing on a daily basis. Not everything, obviously, but you're hearing about different AIs that book appointments. Obviously, Claude and ChatGPT, we utilize it as like an editor, right? So writing is a big one. Executing on different files, reading emails, like all of you can basically have a personal assistant at your fingertips. So how much should we actually trust AI to do the correct job without actually having to check what it's doing? Lisa?
So I would say, like you said, there's a shift between just like chat bots and helping us rewriting stuff and researching stuff to more okay, it can feed into your Outlook, it can book appointments, you can, reply to your emails without you doing anything. And it even sounds like you because it learned before of what you're sounding like and what is your usual cadence and what is your sentence build and all of that. So certainly very helpful in a daily life. I would say, me personally, I'm not yet that comfortable to let it do everything on its own, specifically when it comes to emails at work, right? It's very important. Like, okay, when there goes something wrong, it's,
Mhm.
or booking flights or something that, involves money actually that gets that flows out on my account. So when it comes to that, I would say give it a try and kind of, but still have like the overview over it before it's executed, until you get comfortable with it.
Mhm.
But then I think that's where it's going down the
Yeah.
road, right? I mean, once we're all comfortable with it, that's 100% sure, right? Like in 5 years or whatever, if you look back, it's like, oh yeah, 100%. Like I booked a flight and it found me the best thing.
With 3 layovers.
Right.
Because it was the best price.
it ordered that for me, or that I didn't even have to think about. It replies to my emails. It sounds like me and all of that. So I think when we look back in a couple of years, it's simple and it will work. But for now, I think, me personally, I have to get a little bit more comfortable,
Mhm.
and I have to, check it before it actually gets executed,
Yeah.
just to be sure.
So Keith, you sent me a chart the other day, and so one of the other questions that AI told me to ask about AI was AI and jobs in the actual picture of what it's looking like. So one of the charts that you sent me was this theoretical occupational category and like
Occupational hazard.
yeah, of like the theoretical impact and displacement it can have across different industries and job categories, but then the actual observed impact that it's having, and it's a very different picture. So like when we think about the Citrini report, they paint this picture of 2028 and it's doom and gloom, but then the actual what we're actually observing right now is not that. And so just want to get your thought on like the actual displacement of jobs versus like the augmented aspect of it that we're just theoretically thinking about.
Yeah, I think it's gonna, like Lisa, I think it's gonna be more. It's actually gonna help make jobs more efficient, which makes people more productivity increases, which is fantastic. Stocks always love to hear about productivity increases. So I think that's what it's going to do. But it's certainly going to displace certain jobs. We've been clear about that. It's the white collar versus blue collar, which is pretty evident, right? There's stuff that you can't manually do. AI is just not going to do it. Someday we may have robots to do some of that stuff. Maybe those building whatever it is. But for the time being, yeah, no, I think there'll be some job displacement. But as a whole, I don't think it causes unemployment. I guess that's kind of what we're ultimately getting at, is unemployment to go to 10%. I do think there'll be some hazards along the way and some jobs you don't want. We've been very clear about what we use is for editors and things like that. It's like, that was your full-time job. That's a tough position to be. Entry-level programmer. I saw you doing some stuff the other day with Claude. It's like, well, that probably used to take somebody a week that you probably just did in 5 minutes. That's probably not a task that you certainly want to tie your career to.
Right.
But if you were doing it, to Lisa's point, the oversight, making you more efficient, those mundane tasks, I'm like Lisa, I think you're in the early stages, so you have to double check everything. But at some point in time, those mundane ones, you'll just, as you trust it more, and it works out the kinks. There's definitely errors. Everybody sees errors in different things. Like even on our editor, it does great, and 95% comes back, but there's another 5% you still need to go back in there and just kind of tweak something, a tweak to the tweak, right?
Yeah.
So no, it's interesting. So I'm certainly not the 10% unemployment, and then we have a chart here that just massively that shows the potential, whether it's management, all these white collar business and finance, computer and math, like our jobs or our advisors' jobs that we work with, right? I think it certainly can make them more efficient. Note takers and things like that.
Yeah.
Those mundane tasks that allows them to be in front of the client, relationship building, still people business. It's not, yes, you can get some insight from one of these AIs about potentially investing or questions to ask, but in the end of the day, if you have your life savings, you want to be able to see a person, talk to that person, build that relationship, know that the trust is there. Whereas all of a sudden there's one error in some AI thing, and all of a sudden, it's not gone, but all of a sudden it's like, whew, didn't think that was going to happen. And it's
Right.
like, well, you gonna go complain to your AI? It's like, what happened to
Well,
this?
that was the last question I was going to ask, and I'll try and keep it short. But AI in healthcare. So one of the things that AI asked me to ask about AI is diagnosing cancers and designing drugs and predicting patient outcomes, and who is actually liable for that. But I have an interesting story about that. Is one of the guys that I grew up playing hockey with, he was sick or continuously sick, kept going to the all sorts of different doctors, trying to do different tests. The doctors kept telling him they're fine, or he was fine. Put all of his symptoms into, at the time, I think it was ChatGPT, told him that he had cancer. So he went and had an appointment with a cancer doctor, and they were like, yeah, you have stage 1 cancer. So like,
Wow.
which was really interesting because it caught things that just based on the
Normal, yeah.
symptoms that, this doctor might not consider, or this doctor might not consider, but they caught it early. So like, he's doing better now. But like, if it was wrong on the patient outcome or on the drug design, like who is actually going to be responsible? So just briefly, what do you think about that and the actual impact that can have on just healthcare in general?
I think we talked about this last year at some point, that some hospitals are using AI to predict the probability of death for their patients over like different timeframes. And they're using that for, better care, to better, get resources where they are needed, and to earlier interfere, to probably, expand the life expectancy. But I think overall, what that also raises a moral question. Like, if AI can, give a probability to be your end of life, then okay, are there some medical things that will be not done to you because it doesn't matter anymore, right? Because you have an 80% probability, or AI came up with an 80% probability that you will die in 3 months. Oh, do we really want to spend that money as an insurance company on that patient that's probably gonna die anyways, right? That you would have normally gotten that treatment, for example. So it raises moral questions of how it will be used. And I think, insurance companies are sneaky, and they probably figured that out by now, that this is a probability to save costs down the line. So I think there's some moral questions, especially when it comes to healthcare, when it's the life of humans that are on the line.
Yeah.
Where it's just an ethical question to figure out with, and how we deal with regulations potentially to avoid that scenario.
No, I mean, your friend's story is great. I think that's kind of the road that we're going down, which is I think it's more beneficial to catch those. But you're still going to need oversight at the end of the day. Like, he ended up going to a cancer doctor.
Yes.
So I think that's where it is. And then Lisa touched on ethical anytime you can have just chapters on ethics on whatever industry you're in. And so it's like, that's going to be another argument for the different day. But I think it's here, it's real, it can potentially help people. You're still going to need that final oversight, because you don't want to be taking drugs and like all of a sudden some other doctor that's an expert in that area is like, yeah, that's not what you want. But I do think it can gather a bunch of data that maybe people were missing, and kind of give you a better shot of some better outcome.
Perfect. Love it. Well, if you like what we're talking about, feel free to share. But then, of course, as always, like and subscribe. And we'll see you guys next week for whatever that hot topic is going to be.